Welcome to the deep dive. We've got our usual stack of sources here, articles, notes, research ready to go.
Yep, and our job is to pull out the real core insights for you.
Today, we're looking specifically at Bitcoin. How did it fare during that recent Israel-Iran conflict?
Exactly. Our mission for this deep dive, see how Bitcoin's price reacted, look at the financial flows, especially ETFs, and unpack what analysts in these sources are saying about its drivers and maybe risks.
Okay, let's jump in. The data runs up to June 13th. And one thing that really stands out from the material is, well, Bitcoin's price resilience.
Yeah, it's pretty striking.
Yeah.
He had Israeli airstrikes, potential for things to get much worse, but the price kind of just held around $105,000.
It dipped, though, didn't it? I saw something about liquidations.
It did, yeah. Briefly went under $103,000,
Yeah.
and that did trigger about $422 million in long liquidations. Forced selling.
Ouch.
But it recovered.
Surprisingly fast. Back around 105K pretty quickly. I mean, it's still trading less than, 6% off its all-time high from late May? Around 112K, that was. So that quick recovery suggests the market wasn't fundamentally shaken by this specific flare-up. Interesting.
Seems that way, based on the price action described.
Okay, so resilience on the price chart, but what about the actual money moving? The sources mention ETF flows, too.
Right, and that's another fascinating piece. Bitcoin ETFs saw 5 straight days of inflows, right when these tensions were high.
5 days in a row.
Yeah, started June 9th. Over $386 million came in that day, and it kept going right through the 13th, which added another $301 million.
So what's the total over those 5 days?
The sources put it at over $1.3 billion just in those 5 days.
Wow. $1.3 billion flowing in while geopolitical risk was supposedly spiking?
Exactly. Seems like a lot of capital wasn't deterred, at least not by this specific situation.
Which brings us to the analysts. If it wasn't this immediate conflict driving things fundamentally, what did they think is?
Well, one key view highlighted in the material is that long-term, these specific events might not be the main story for Bitcoin.
Okay, so what is?
This perspective from Nick Puckrin at Coin Bureau points much more towards the U.S. dollar index, the DXY.
The dollar's strength against other currencies.
Precisely. And he notes it recently broke below 100. That's its lowest in over 3 years. And breaking 100 is often seen as, a pretty big deal for dollar weakness.
And Bitcoin often trades inversely to the dollar, right? So a weaker dollar is bullish.
That's the argument presented, yeah. A weaker dollar, long-term, could push investors towards assets like Bitcoin, especially if they're looking for alternatives.
Makes sense. But hang on, that's the long-term view. Did the analysts flag any immediate risks related to the conflict?
They did. And this is crucial. The same analyst highlighted a major short-term risk, the Strait of Hormuz.
Okay, the oil choke point.
Exactly. About 20% of global oil goes through there. If that gets closed, even briefly,
big problems. Energy prices would spike.
Massively. And that could ripple through all global markets. The thinking is that kind of shock could cause a sharp sell-off in risk assets. And that might include Bitcoin, in the short term.
So it's a kind of dual picture. Maybe resilient to this specific event, but still vulnerable to a major disruption stemming from the region.
That seems to be the takeaway. Macro drivers long-term, but acute shock risks short-term.
And the sources also seem to connect Bitcoin's appeal more broadly, beyond just this event. Things like wider economic uncertainty.
Yeah, definitely. Themes like global macroeconomic uncertainty, rising government debt everywhere, general geopolitical instability, and maybe perceived weaknesses in traditional finance.
All potentially making something like Bitcoin, with its fixed supply, look more attractive to some people as perhaps an alternative store of value.
That's the idea presented, that these broader factors are sort of underpinning its adoption.
Okay, so let's try and boil this down. What are the absolute key takeaways from these sources?
Well, first, Bitcoin showed surprising price resilience around 105K during this specific Israel-Iran tension.
Right, and it saw really significant ETF inflows over $1.3 billion in 5 days, right in the middle of it.
Yep. Then there's the analyst view. Long-term, the U.S. dollar index, DXY, might be a much bigger driver than specific flare-ups.
But there's a clear short-term risk if something major, like the Strait of Hormuz closing, actually happens. That could still hit the price hard.
Exactly. So understanding these different layers, the immediate reaction, the money flows, the long-term drivers, the short-term risks, it helps you make sense of how these global events interact with, newer assets like Bitcoin.
It's not always straightforward. Sometimes resilience, sometimes clear risks.
And that leaves a final thought for you, based on all this material. Considering how Bitcoin reacted here, and thinking about those bigger drivers like macro uncertainty and maybe issues with legacy finance, could Bitcoin's actual role in the global financial system be changing in ways we're only just starting to grasp? Something to think about.